All right, welcome everybody to our November 12th edition of This Week in Crypto. I'm Brian alongside my co-host Dino. We're going to go over a pretty wild week here with Bitcoin actually getting very close to 69,000, Ethereum above 4,800. And then we've kind of seen a gradual slide these past few days. You can see in totality, when you look over the past week, Bitcoin was actually still up 3.4%, which might come as a surprise to many. Ethereum up a very modest 1.7%. And then you can see among the top 100 assets, market cap wise, it was a pretty mixed bag. And we had a few outliers such as Litecoin doing quite well, Helium, Loopring, Kadena, and Mina, among others. But Dino, I'm very interested to go over quite a bit of on-chain analysis today for the top two coins as well as others. What have you been seeing?
Yeah, so I mean, obviously we're having a sort of a short-term correction today for Bitcoin, slightly for Ethereum, although not as dramatic. I think it should be put in perspective. There have been a few signals of an overvalued market. I wrote about them in the weekly report on Tuesday. We talked about the fact that whales seem to be still offloading parts of their bags. We talked about funding rates growing higher and increasingly bullish, meaning that the derivative market was going increasingly long, which seems to also point to a little bit of excessive greed. So there were some yellow flags that a short-term correction might be due. That being said, I'm still relatively optimistic from a network level perspective about Bitcoin's current standings. I use the daily active addresses for Bitcoin as the thumbnail of this video. I think it's very telling, the fact that Bitcoin's daily active addresses hit a 6-month high just the other day. If that is the type of momentum that we can look forward to in the coming weeks and or months, I think we are still more than fine. I also wouldn't be surprised if we had a slightly deeper correction. I saw some people talk about 59 or 57K being the support. I think that would reset a lot of metrics that seem to have been pointing to overvalued conditions. But even with this sort of slight correction, we are seeing some of those metrics normalize now and reset to at least sort of, if not undervalued, at least sort of neutral to undecided range, which is still pretty good, right? So yes, there are a few drawbacks or yellow flags that remain in Bitcoin's data, and we'll talk about them today. But from a network-wide perspective, I'm still cautiously optimistic if this uptrend continues. Remains to be seen. You need to kind of keep an eye on these charts on a daily basis, especially in the coming week. But yeah, that's generally what I'm seeing. Yes, a correction might have been needed or might have been due. Is it the end? I'm not sure, or at least I don't think so. But let's see what the data says, right?
Absolutely. Yeah. Why don't we look at Bitcoin first here, and we'll go over a few of the main indicators, beginning with circulation. We've had a kind of a tapering off here. This is, of course, a long-term look at the last 6 months of the amount of unique tokens moving on the BTC network, with a bit of a drop-off happening this week. If I zoom in here a little bit, we'll go to just the last month. We can see that it kind of peaked here on November 2nd, about 10 days ago, at about 251.7K in terms of total unique tokens circulating on that day. And we've kind of, obviously, these are weekend days, but even without those weekends, we've had a bit of a drop down in the trend here, with yesterday being our last full day of data at 189.6. So obviously happening right after a new all-time high. It's a bit concerning that we didn't see circulation a bit higher. Dino, what do you think here?
I think it's to be expected with a pullback that there will be slightly lower amount of value being transferred on the network. Like, for example, if you look at Bitcoin's network profit loss, throughout most of the week, there has been a uptick in the relative profit, sort of an uptick in this metric suggesting profit taking on the network. And then in the last day and a half or so, we have seen a network profit loss completely normalize and actually move into a negative direction a little bit. You can plot it against the price so people can see what happened when. But overall, the only thing that this really tells me is that currently people are having a little bit of an inertia over this recent correction. It's to be expected. Generally, I think it's too early to sort of call this a massive drawback or a massive decline. I think it's just a reaction to like a 24 to 36 hour span. Before that and up until the all-time high, I think this is the context that we should keep in mind. So both the amount of unique tokens moving on the blockchain as well as the amount of unique addresses interacting with BTC have been soaring in the past sort of 2 to 3 months even. So yeah, there will be sort of a slight decline as the market sort of revives or sort of embraces this shakeup. But it's nothing to, it happens every time. So I wouldn't sort of read too much into it on a sort of a 24 or 48 hour scale, right? That being said, it is to me interesting at least that we are seeing, or we have seen yesterday, a pretty big dip in network profit loss, right? So for people that are not familiar with what this metric does, it essentially tries to visualize the total ROI of all daily transactions on the Bitcoin network, right? So when the network profit loss chart shows a massive spike, that means that on average, the coins that are moving at that particular time on the blockchain are moving at a significant profit relative to the last time that they changed addresses, which the assumption was the time that they were acquired. And so when you see this drop yesterday or like early this morning in Bitcoin's network profit loss, what that seems to suggest is that at that point in time, the addresses that were, the Bitcoins that were moving on the blockchain were moving at a relative loss. Now, just think about that for a moment. They were moving at a relative loss after Bitcoin briefly hit an all-time high. So what that seems to suggest is that there has been slight sort of capitulation from weak hands in particular. So there haven't been many days at all that Bitcoin was higher in its price action than it is today still. So the fact that we are seeing a drop in network profit loss means that even at these massive, price points for Bitcoin, coins moving on the blockchain are moving at a loss relative to the last time that they were acquired. So there are only a handful of days where you could acquire Bitcoin at higher prices than today, even like with this correction in mind. So what that, like I said, that seems to suggest to me that there is a little bit of concern on the market about this correction and about where we might be headed next, which I think is good. I like seeing fear in the market. I don't think it's too dramatic. I think, if we drop even further, I would expect to see a very sizable dip in network profit loss as people really start losing their mind. But it's an interesting point nonetheless that we don't seem to, it seems like it's really starting to shake up a few hands, especially short-term traders and swing guys that are hoping to capture this movement, and we're probably hoping for 70 or 75K. So yeah, they're now feeling the burn a little bit, which is good, right? In the short term, at least. So we'll have to wait and see. But in terms of circulation, I'm actually curious, Brian, what your NVT model says. So
absolutely,
yeah, last couple of days there has been, like you said, a little bit of a decline in the amount of actual value being transferred on the blockchain. So the question I had was, how does that impact the NVT model? Because for people that are not familiar, the way that NVT model works is it takes the market cap of a coin and then it divides it by the amount of unique coins that are moving on the blockchain on a daily basis. So the assumption is if the market value is too high relative to the transfer of value on the blockchain daily, that means that the coin is slightly overvalued. And then if the market cap is too low relative to Bitcoin's network activity on a daily basis, then that means that the coin might be undervalued a little bit. So I seem to see that even with this slight drop-off in circulation over the last couple of days, your NVT model is still in the green, suggesting that even though there is a little bit of a decline in network-wide activity, which is sort of somewhat to be expected because of this correction, network-wide, we're still in the positive, right? There's still sort of a green bar telling us that relative to its market cap, the amount of value being created and transferred on the network daily is still high, right?
Yep, that's exactly right. And a week ago, we were actually way down here in bright green mode, which is indicative of very bullish circulation going on. And it has tapered off, which matches what we see back here when looking at circulation. uh, the mild taper off of circulation has brought it back to kind of a semi-bullish territory. But for the totality of November, we're still looking to be in a good spot. You can see the trend lines over time that naturally account for the allowance of a rise in the NVT. Otherwise, everything here would be red over time. So these trend lines help give context to what's been happening, over the last 5 months or 12 months or even 16 months or so. And it allows us to see that with the proper growth in supply of Bitcoin, we're still getting decent amounts of circulation, even though it hasn't really grown the way we've hoped in the last month as we've achieved this all-time high. But those first 5 days of November is kind of what helped us propel ourselves to a new all-time high, because we were churning out such high amounts of network activity at that time.
Yeah, so let's add to that what's been going on recently, like in the last week, with Bitcoin's daily active addresses, because I use this as a thumbnail of the video because I think it's going to be a very important gauge of where we go next. So let's use, instead of just flat daily active addresses, let's use the rolling ones just to kind of exactly pinpoint how high we got in terms of the amount of unique addresses sending or receiving Bitcoin on a daily basis. So what you'll see is that, let's take maybe 6 months or a year just to kind of give it more context. What you'll see is that during the all-time high, or sort of a lead up to the all-time high, Bitcoin's daily active addresses have soared to a 6-month high, so basically to the highest level since the May correction, peaking at 1.19 million. So just for some context, the all-time high for Bitcoin's daily active addresses, so the amount of unique addresses interacting with Bitcoin daily, the record, the all-time high is 1.36 million. So we're just shy, right? Very close to the sort of the all-time high amounts of addresses interacting with BTC on a daily basis. Now, this obviously could be prompted by this massive increase in Bitcoin's price action and us reaching new all-time high and moving into price discovery. But I think that this is where one of the key battlegrounds for Bitcoin will be in the next couple of weeks. So expect to see a drop-off in this metric over the next 2 days. So over the weekend, almost all the time, or sort of always, we see a pretty big decline in daily active addresses. I would not be surprised that we see maybe even like 25 to 30% drop over the weekend in terms of the amount of addresses interacting with BTC. So not surprised at all if we hit like 900, even 850 or 800K over the weekend, like especially Sunday. It's fine. That's usually what happens. The key question is going to be what happens early next week. So assuming that Bitcoin, let's say Bitcoin consolidates around these levels, or it dumps to where people say, or sort of technical analysts say that might be support, like 59 or 57K. Assuming that happens, I think it's going to be very telling what Bitcoin's network activity does. If we are able to replicate these levels, or at the very least sort of continue this uptrend to maybe 1.10 million active addresses, I think that's a fairly strong sign that there's still new blood entering the rally, and there's still quite a lot of interest in the top-rated cryptocurrency in terms of network activity. If, however, alongside this correction, we see a sizable decline, similar to what we've seen in May, in the general interest and active interaction with the top coin, that might be more of a bearish convergence. Generally speaking, that might suggest that the rally, or at least the redistribution part of the rally, might be coming to a close. And then as a result, we're going to see network activity completely slump. We're going to see value transfer and accrual on a daily basis completely disintegrate. And as a result, we might be seeing a longer correction. So for me, I would be very, very interested to see what network activity looks like come Monday, Tuesday, and Wednesday. It's going to drop off from these levels. That's to be expected. But as you can see, and Brian has shown this 200 moving average, the momentum is still upward. And this is where I'm still hopeful. I'm hopeful that we are able to keep this momentum going, similar to what we've had in the first 6 months or 5 months of 2021. And if that really indeed does happen for Bitcoin, I think even with like slight volatility and short-term downtrends, there is fundamental justification for the rally. If we see drop-offs in addresses and tokens, interacting with the network on a daily basis, that's a different story, right? So currently, I am still relatively hopeful in terms of at least network level metrics. Like there are yellow flags in other metrics. This one, I think, is still looking fine. Now, since we're talking about daily active addresses, let's then talk about a very specific group of addresses which haven't been looking all that hot. So I talked about whales. We talked about it, Brian, last week, and I also wrote about it in the weekly report. Bitcoin whales have not been showing signs of strength. That's just what it is. Specifically, I'm talking about groups of addresses that I think Brian has here in the yellow category. Yeah, there we go. Groups of addresses that hold between 100 and 10,000 Bitcoin. So it's a very large range, but it's essentially Bitcoin millionaires and above. Here we can see their combined holdings over the last year of data. So as you can see, like if we pull this chart a little bit to the left more, you can see that basically between March of 2020 and May of 2021, there has been a massive accumulation spree by these addresses. There we go, just as Brian is now showing. So that obviously sort of ties in with this idea or this narrative that it was institutional interest that was driving the rally because these large wallets have been increasing in value. And then once we hit an all-time high back in actually in April, there was a start of an offloading period for these addresses. There was a bunch of Bitcoin being moved away from these addresses and rebalanced into other groups of holders. So that seemed to suggest that whales were starting to cash out and take profits. So recently, or more recently, over the last 10 days, there has been a similar drop-off in their combined holdings. I believe currently they are down between 60 and 70,000 Bitcoin. Like the total amount of BTC held by these addresses has dropped by about 60 to 70,000 Bitcoin. So that's around $4 billion in the last 7 days. It's not a small amount. It does point to the fact that at least some large addresses seem to be perhaps reducing their exposure a little bit and moving to a risk-off scenario. Now, I did say last week, and I said it in the weekly report as well, the group of addresses that has received most of these funds is the group of addresses that is above this one. So addresses holding between 10,000 and above. Those are the addresses that have received the biggest inflow of these funds over the last week. Now, I said it last week as well. There are only 84 addresses that are interacting with that have this much BTC, 10,000 and above. Most of these, at least in my opinion, are going to be dominated by exchange wallets, and that's why I think this is a slightly concerning signal as well. It might point to some short-term profit taking by whales, and as such, just not a massively positive development for Bitcoin in the short term. Obviously, this can change on a whim. If we drop, we might see some dip buying from these addresses like we've seen in May. But so far, at least, they have not been super excited about the rally. We're not seeing any signs of massive appreciation of their holdings, massive accrual by whales. In fact, we're seeing quite the opposite. So this is one of the sort of warning signals that I talked about in the weekly report, where it's just like, even though network-wide activity is looking fine, specific pockets of network activity, ones that maybe even have a disproportionate impact on the market, specifically talking about whales, they're just kind of not really doing what they're supposed to do. How long this lasts for, I don't know, but 70,000 Bitcoin is not a small amount of money to drop off in a 10-day spree. So yeah, it is what it is. It's for now, it's still sort of looking like a yellow flag for me, Brian.
Yeah, I would agree with you. This is one of the most concerning metrics out there at the moment, especially considering, going back 2 weeks, October 25th or so, there has been a drop off of about 1.2% of the total holdings of this 100 to 10,000 Bitcoin addressed here. And that's not a small amount as you look over the last 2 years. And we can see really the last time we had this much of a sustained drop off was right before the all-time high happened in mid-April at that time, just going above 64. And at that point, they dropped what looked to be a total of about 1.8%. And those are, I guess, two of the three really big drops that have happened in the last 2 years. We talked about this one being a bit of an anomaly of exchange addresses trading with one another. So we ruled this one out. But other than the current one we're on, the one that happened from April to May, the other one was in March 2020, of course, right after Black Thursday occurred. And that one ended up being sort of unfounded fear because the price was already beginning to climb as they dumped their coins. So whales actually assumed that the price would not recover right after Black Thursday occurred, and it actually did. But for the most part, this tier has a tremendous impact on future price movement. So it's something to keep an eye on for more of a macro look at how the market health is standing.
Yeah, so we'll see what happens with them. Obviously, this is like non-label specific, but I think it's if you look at the supply distribution by number of addresses, and then you only zero in on the group holding between 10,000 and 100,000 K Bitcoin. Sorry, 10K to 100K Bitcoin, you will see that it's a very, very small amount of addresses. Not a whole lot of actual individual whales, even institutional addresses, which like to sort of shard their holdings into different various custodian wallets. Not a whole lot of addresses holding this amount of BTC. Most of these, in my assumption, would be belonging to actual sort of exchange wallets rather than legitimate whale activity. So this is why I like to look at the two address groups that are below this one, because I think they more accurately represent the actual sentiment of large BTC holders. So yeah, that is, at least from an on-chain perspective, the metric that kind of rubs me the wrong way the most at the moment. I think network-wide, like I said, still looking fine. I actually think MVRV is now looking better than it did a week ago. So, I mean, we can look at it right now and we can see that at least the short-term MVRV has completely normalized. I mean, I say normalized, it's basically gone to a neutral territory once again. So people that are not familiar with this metric, MVRV tries to use on-chain data to compute the average profits or the average losses of a group of addresses. So 30-day MVRV ratio is the average profit of all addresses that have acquired Bitcoin in the last 30 days. So at the moment, what is that, Brian? 0.65, I think?
0.15, but this is 2 years. So zooming in, you may be absolutely right.
I think it's the same thing either way. Like we're basically, let's say it's 0.15. So
yep, 0.15.
So at 0.15, what that means is that all addresses that have acquired Bitcoin in the last 30 days, on average, their profits are 0.15. So they're basically breaking even on their initial investment, right? So the question then is, okay, well, what is the likelihood that these addresses start taking profits or they start selling because there's not a whole lot of average profits, right? In my opinion, the likelihood is not all that high. Generally speaking, the way that people use this metric is that the higher the MVRV ratio is, the more unrealized profits there are. And then because of that, the more risky it is to enter into a trade, because the more likely it is that people that are already in that trade and that are already acquiring and gaining profits are going to start taking those profits at some point in time. So the way that people or on-chain analysts try to determine where they might start taking these profits is by looking at historical data. So if you look at the last 3 years of Bitcoin's 30-day MVRV ratio, I generally talk about anywhere between plus 15 and plus 20% being sort of a established danger zone for Bitcoin's 30-day holders. So it seems like when they are between plus 15 and plus 20% on average, in terms of their profit margins, this is where they like to take some off the table and leave the market, or at least reduce their Bitcoin exposure a little bit. We have been sort of inching towards the danger zone a little bit with this new all-time high push. I think we got to around plus 8%. And now with this slight drop-off in the last day and a half, we're back to neutral. So it's not, the point that I'm trying to make is that we are still ways away from a historical high in terms of a 30-day MVRV ratio. So really what this metric is showing is, like I said, it's only showing the fact that short-term holders are currently about break even on their initial Bitcoin investment. So then you need to decide for yourself what you think the likelihood is going to be that these addresses start dumping on the market while they're basically breaking even or even slightly below break even. What is the likelihood? I mean, remains to be seen. And then the lower the MVRV ratio gets, from some analysts' perspective, the lower that it gets, the more opportune time it can be to accumulate Bitcoin. So like Brian is showing here, there seems to also be sort of a pretty sustainable support level around minus 15%. So like I said, some people talk about 59 or 57K being two support levels that they're looking at right now. If that really does indeed happen, I think this MVRV ratio would completely reset. It would go back to negative. Probably it would hover around minus 10%, which would be pretty good for BTC. Like it would be even better than it is now. Currently we're sort of in the neutral zone for MVRV. If we continue to dump, the more we dump, the better it's going to, or the healthier it's going to look from a historical perspective. So that's at least as far as the 30-day ratio is concerned. As far as the longer term holders, like if you look at the 365-day MVRV ratio, or basically the average profits of all addresses that have acquired Bitcoin in the last 365 days or last year, it's looking a little bit more concerning. Just the fact that long-term traders are still quite high in profit. So Brian, I think if you look at the 365-day MVRV ratio, the current value is like around 37% or something, if I remember correctly. I'm not. Let's check where we are right now. Yeah.
So we're sitting at 37%.
Yeah, exactly. So 37%. So you can see on this chart, right? There have been, in the last couple of bull cycles, there have been much higher MVRV peaks than where we are right now. So the long-term MVRV ratio, in terms of bull cycle highs, it tends to peak between plus 100 and plus 120%. So this is where usually long-term holders really decide to start taking profits and sort of dumping on the market. We're not there yet, but we're also not undervalued by any stretch of the imagination. There's still quite a lot of profits that these addresses can realize. So proceed with caution, even though we're not at the all-time high levels, like all-time overvalued levels. There's still a little bit of overvaluedness here to be careful or be cognizant of. So yeah, generally speaking, I like the fact that we dropped a little bit, just because it allows metrics like MVRV to reset. There's a need for these metrics to reset every now and again in order to provide fuel for another leg of the rally. It could, in my opinion, reset a bit more before I can really be super confident about it. But even these slighter corrections are still decent for Bitcoin's chances of another leg up, assuming other metrics agree with it. So I think that's where we are right now, Brian, in terms of on-chain metrics. Maybe let's look a little bit into off-chain data and then take questions from chat, because there's I think you and I talked about funding rates in particular, but yeah, we can also check out social metrics as well. There have been some quite interesting developments in terms of Bitcoin and then Ethereum's also off-chain data the last couple of days. So for Bitcoin's social metrics, I was actually very surprised what they've been looking like over the last couple of days. So when Bitcoin hit all-time high here a few days ago, I wrote an article, a report on what the social response was, and it actually wasn't that visceral at all. In terms of social volume and social dominance, the amount of chatter around Bitcoin when it hit this new all-time high was actually quite low relative to the all-time high that we hit on October 20th and relative to the all-time high that we hit on April, what was it, like 13th or 14th. So generally speaking, there hasn't been a whole lot of hype around this latest all-time high for BTC, which at least for me would be a relatively positive development. I think that it seems to suggest that people are not extremely euphoric about the current state of the market. They're not irrationally confident, or they're not calling, at least en masse, they're not calling for Bitcoin to, hit 100K, 150K or whatever. Generally speaking, a lot of people know, if they're watching these calls, if they're reading our insights, we don't like elevated social metrics. Based on based on the analysis that we've done on these social metrics, and based on just our own experience with these metrics, when a coin's price pumps and then you see a bunch of social metrics pump alongside with it, what that usually suggests is that the crowd is becoming hyper aware of the rally. That means that there's going to be excessive greed, and there's also going to be less of a buy side pressure moving forward, because everyone that has wanted to get in on the rally is already in on the rally. Recently, or at least as far as this latest Bitcoin all-time high is concerned, you can see there's been a decline in both the total amount of mentions of Bitcoin over time, as well as the relative amount of mentions, or basically the amount of mentions of Bitcoin compared to mentions of other coins, which is what social dominance shows. And then the last social metrics that we want to consult is the sentiment of the crowd. So basically what we do is we look at all these mentions of Bitcoin, and then we rank them. So we built a machine learning algorithm that ranks these messages as either positive, negative, or ambivalent. And as you can see, there's also been a relative decline in the average sentiment towards Bitcoin over the last week. So even though we hit a new all-time high, we have not seen the same level of excitement. We have not seen the same spikes that we have seen back in April, as well as back in October. Actually, it's quite the opposite. Currently, we are sitting at a slightly bearish to undecided range as far as the crowd is concerned. So this is where you want to be. Actually, you want to be even lower than this, but it's certainly looking better than if we saw massive spikes and massive excitement about BTC. If you want to see where you don't necessarily want to be at the moment, show people the Ethereum weighted sentiment. It's very different to what Bitcoin is experiencing right now. It's actually extremely high, suggesting that as Bitcoin corrects and Ethereum seems to be holding its ground, sentiment towards Ethereum is on the rise, man. It's getting there. And also, if you look at social volume and social dominance for Ethereum, it's also on the rise. So it seems like while Bitcoin is losing some of its market cap dominance, and while it's losing some of its price action and price momentum, the new, or sort of the emerging market narratives turn to Ethereum and other alts. So currently, if you want to talk about concerning signals as far as social data is concerned, you probably want to look at Ethereum. Not saying that this is sort of the end of the rally for Ethereum or whatever, but it does seem to suggest that people are paying more and more attention to it, and specifically the retail sector is paying more and more attention to it. So what happens next? It's up to you to decide if it's good or not that the mainstream community is starting to talk a lot about Ethereum. So yeah, something to keep in mind, Brian.
Yeah, Ethereum is obviously getting more of the chatter now. Obviously, even more so, kind of the main altcoin pack. The meme coins over the past couple of weeks have had a large share of the social volume, even though they've cooled off recently. Loopring and Decentraland over the past week have been getting a ton of discussion. OMG's been getting some for some of their pretty wacky price action and their sky low funding rates. But overall, when I look at Bitcoin and its social dominance in particular, I'm interested to see whether it pops back up soon. I'm going to get rid of social volume for a minute just to make it clearer. I'll even make this a 7-day, because we're looking at a macro 3-year span, which is actually good. Because it illustrates that when things get really low, like it did in mid-May, that's when things drop off. Because if Bitcoin is getting low, that means that everyone's focus is on those other altcoins and investing in the things that don't have as much stability, because if Bitcoin falls, everything falls with it. So we saw, in mid-May, the same kind of fall that we're seeing now. It absolutely doesn't mean that we're going to see the same kind of dip, but it is a concern when so much focus is away from the number one asset in crypto. And we saw it, in August, the end of August, right before the early September drop off. a little bit on right before Black Thursday, but I wouldn't really count that. And then July 2019, really. But nothing really has approached this low of a discussion rate other than mid-May when we saw a drop off right after it occurred. So just keep that in mind. It is a yellow flag, I would call it.
So, I mean, it's there's a few things here. So obviously this is a 7-day span. So you can see back in January when we did hit that first all-time high, we had a massive spike in social dominance before that one. Right there. Yeah, right there. There was a pretty significant uptick in social dominance. And then if you take a daily interval, you will see it like on a daily scale, both in terms of social volume and social sentiment. There have been sort of spikes in social dominance all throughout the sort of January to May rally. But in fact, we are seeing the same sort of conclusion from Joe Cobonio, saying that for me, low social dominance of Bitcoin is even more concerning because people are talking more about alts and gambles, and we all know where it ends. I think it's a fair perspective. For me, I've been seeing that being the case for months now. Like if you go back to like August and September, it was the time of Solana and Polkadot and Phantom and all of these side chains. That was the main sort of narrative. I think we can even see it on the chart there when that was like mid-September, I guess, that there was a pretty significant drop in social dominance of Bitcoin. So it didn't really stop Bitcoin from pumping. Generally speaking, I think it's still sort of the case that people are just talking about a bunch of shitcoins and altcoins more than BTC. And I can see how it can be for some people concerning because it gives them 2017 vibes. Back in 2017, it was sort of the same concept. People were making oversized gains on the altcoin market, on the like crypto roulette, crypto casinos, and then as a result, the market got too heated. So I mean, it remains to be seen. At least for me, it's very notable that there's no hype around BTC whatsoever at the moment. Whatever that may mean, up to you to decide. But last thing, Brian, let's look at the funding rates for Bitcoin because I think they're also relatively interesting on sort of have a relative interesting impact on Bitcoin and where its price action might be headed.
So here's Binance first. We've seen a pretty sky-high funding rate, pretty much the largest consistent spikes. I'll take off FTX just to make it clear. Most consistent up spikes since really mid-May, and we saw a big drop off here right when we were at about 0.057% or so. And it did neutralize temporarily. Once the dip happened, the funding rate started to go back up again, which is quite interesting. It shows that traders are quite confident that things are going to rebound now that we're down in that mid 63K range again. But really, ideally, we want to be buying in when you're seeing negative funding rates and there's fear and blood in the streets, if you will. It doesn't necessarily mean prices can't climb when funding rates are high, but it's a case of how extreme it gets. Because if I go back to the last year here, you can see that we had much larger spikes going back as early as February, and the price was still able to climb. It did have this sizable drop off in late February that neutralized the funding rate temporarily. And then every time it spiked back again, notice how local tops were formed so that the funding rate could cool off over and over and over again until we started getting into the negatives. And these were kind of the bottom indicators. But what are you seeing here on your end, Dino, in terms of the Binance funding rate?
It's also not just Binance. There have been spikes in a variety of high volume exchanges. So Huobi finally had some life of its own in terms of funding rates. FTX had seen a relative spike, BitMEX as well. So a variety of sort of high volume exchanges had an increase in funding rates over the last week, specifically up to an all-time high for BTC. So funding rates, for people not familiar with it, it's a fee paid by one side of the perpetual contract to the other. So what that means is when it's high, Bitcoin longs are paying Bitcoin shorts, and it seems to, or it generally points to an average bullish consensus towards the coin. And then on the other side of the spectrum, when it's low, Bitcoin shorts are paying Bitcoin longs, and it points to a bearish consensus. So currently, or at least up to a couple of days ago, we have seen funding rates sort of be extremely or relatively high for BTC. It did not mirror the levels that we saw in January and March, but those were some of the all-time high levels for Bitcoin anyway. So I don't think we necessarily need to use that as a barometer to figure out whether we're overvalued or not. I think currently we are seeing some of these funding rates reset, but they're not neutralized. Like as you can see here on Binance, they're still up a little bit. They're up a little bit on Huobi. They're up a little bit on FTX, and they're not just up for Bitcoin. There's sort of across the board. There's a few. There's a lot of coins that are still seeing relatively high funding rates. So as we dump, I checked the liquidations for Bitcoin longs. There have not been a whole lot of liquidations for BTC longs throughout this latest correction. So I think if shorts really want to dominate the market, they're going to have to do a little bit of a better job liquidating all of these over-leveraged or over-leveraged longs. So yeah, this is another sort of thing that I think might be a little bit of a concern. Anytime that you see high funding rates, essentially what that means is that a lot of money is betting that Bitcoin is going to go higher. So that also provides additional incentive for the other side of the market to try to prove them wrong. Yeah, that's, I think, Brian, generally where we are with Bitcoin at the moment. I think some concerning signals for sure. Some like network level wide, I don't think it's that bad. The question is whether it can remain this high, especially because of this correction, especially if the correction continues. But yeah, the concerning signals for me would be whales in particular, and then funding rates to an extent. And I see some people in chat agreeing with the social dominance being low, pointing to a concern for them as well. So yeah, we'll have to wait and see, I think.
Yeah, why don't we touch on Ethereum a little bit, and then we can start taking some questions. Max, do we have some poll questions and some, I guess, answers coming in?
Yeah, so let me just reiterate. I think Max has already written in chat, but we're going to start taking audience questions now, or chat questions. So if you want us to look into particular coins, you know, there's been quite a lot of interest in coins pumping in the past couple of days. There's been a few coins that have not pumped that people expected would. So let us know in chat what you would like us to analyze in the short, like maybe 10 to 15 minute span that we leave at the end of this call. We'll do some on-chain analysis, some social analysis. As I always say, bonus points if the coin that you want us to look into lives on the Ethereum blockchain, because we do have on-chain data for all ERC20 coins, as well as Bitcoin, XRP, Litecoin, and a few others. But really, our biggest on-chain coverage is on Ethereum. Lampol is making a good point that I made a few times as well, that the leverage limit is now lower. There's no more 125x leverage. And this is why you shouldn't expect the same sort of funding rates that we did see back in January through March. This is completely true. So both, I think, Binance and FTX have lowered their leverage limits after a New York Times article went out, I think, back in sort of, what was it? I think I read it just like in July, that, you know, accused or blamed FTX and Binance for these massive volatility spikes in Bitcoin's price action. And then they dropped their leverage limits from 125 to, I believe, just 25 on both Binance and FTX. Somebody correct me if I'm wrong. But yeah, you are right, Lampo. So
that's how I understand it too. And it essentially means that the percentage spikes up and down requires less for there to be corrections and volatility, as I've seen it. So we won't see the crazy spikes that were above, like, for example, on Ethereum, somewhere going above 0.1% on Binance back in February. And now we're seeing spikes more like, you know, 0.04. And it's still very impactful on prices. So that's how I've seen the funding rate changes play a part in today's landscape.
Guys, while I'm dealing with the poll, one of our Maxims from our team was suggesting to take a look at graphs and the MakerDAO overview regarding newly created.
You mean right. Okay. Yeah, I can show that on my end, Brian, if you want, because I've got those charts lined up as well. All right, cool. I mean, I wrote about that in the weekly. Let me just show you guys what I'm talking about. So, I mean, actually it's a good point since we're already talking about leverage and we're talking about, tell me if you see my screen. You should be able to.
Seeing a black screen on my end. There we go.
Okay, so I'm trying to full screen it. There we go. So yeah, I think I wrote about this. Was it this week? Let me see. It was either this week or last. Okay, it was last week. Either way, this is something that I think is quite a. I mean, it's interesting to say the least. So as you can see, the title here says wrapped BTC locked in CDPs. So for people that are not familiar with what that means, this is the amount of wrapped Bitcoin that is locked in MakerDAO's CDPs. So the way this works is that you can use wrapped BTC as collateral, put it in the MakerDAO system, and then extract DAI sort of as debt, right? So usually or historically, what this means is that when there's a big uptick in especially wrapped Bitcoin, locked in CDPs, is that it seems like people are sort of trying to go double long, right? So what you do is you put wrapped Bitcoin into CDPs, you extract DAI, and with the DAI, you can buy more Bitcoin. You can even put that Bitcoin back into it and extract more DAI. So you can sort of over leverage yourself that way a little bit as well. So this, similar to funding rates, I think suggests that people seem to be quite confident and lackadaisical about Bitcoin's price action, confident enough to sort of put it as collateral so that they can borrow more, so that they can presumably buy even more. And then we see a similar thing with total debt, which is sort of not just wrapped Bitcoin, but overall the total amount of debt in the MakerDAO system here it's sitting at an all-time high as well. So generally speaking, this is what, 4 billion, almost 5 billion, sorry, DAI of total debt. It's suggesting that a lot of people have borrowed DAI from the MakerDAO ecosystem, and a lot of people seem to have done it in the last month or so, month and a half maybe. So what happened in the last month and a half? I mean, you can sort of check Bitcoin and Ethereum's price action, and you can figure that out. I think it's pointing to quite a courageous few individuals, or sort of a lot of DeFi participants that seem to be so convinced that Bitcoin and Ethereum are going to go sky high, that they're trying to make even better on their initial investment of Bitcoin by putting it into CDPs, extracting DAI, and then taking that DAI to buy more. So another sort of sign of potential mania. Not great. Similar to funding rates, the higher that this goes, the more concerned I get, because it seems to point to like over-leveraged people and generally extremely high sentiment. So that's just something that we wanted to point to as well. All right, do we have the poll ready, Max? Anything that people specifically want us to see? Because we're already about 50 minutes into the conversation.
We only have 3 votes so far. So
okay,
chat, please give us a vote. The link is already shared. But we had a lot of requests for this in chat, and it also got 1 vote. So let's start with Ren.
All right, cool. Brian, do you want me to keep sharing, or do you want to share, take it over again?
Yeah, it's entirely up to you.
All right, let's start looking a little bit up at Ren, and then you can do the next one. Let's. Okay, while Brian is fixing his camera, I'm gonna. Okay. I'm going to talk a little bit about what we're seeing with Ren. So let's start with the general sort of on-chain activity for Ren, specifically the amount of addresses interacting with this coin recently. As you can see, it's sort of been plateauing for the last, basically since the start of October here, plateauing between sort of 300 and 450 addresses. This is relatively low. I mean, it wouldn't put it, I think it would probably put it in the top maybe 30 or 40 coins on Ethereum. But generally speaking, the trend seems to be either down or consolidation. So there doesn't seem to be like a large network effect happening with Ren at the moment. You know, this could change with its price action, but I mean, this, for example, was a pretty clear divergence, usually what we call a bearish divergence in terms of price action of the coin rising, and then the actual amount of activity on the network, although it has sort of soared short term, it hasn't been able or to maintain these same levels of activity. So when you see this, we've actually have this as a separate chart. So if you go here and you can click on price DA divergence, it's basically trying to capture these sort of trends. So the difference between the price on one hand and the DAA, which is daily active addresses, on the other hand. So this seems to point to sort of a lack of fundamental support for the rally. So far, we are also really not seeing a whole lot of additional interest in REN. Doesn't need to mean that it can't recover, but for the time being, at least, there's not like a whole a clearly bullish signal here in terms of just the amount of interest in the coin. I always liked REN, but recently it's just in terms of the people interacting with it. And I know you can stake REN and you can do a bunch of other stuff with it, but in terms of just speculative use and daily or sort of intraday transfers of REN, it's just not that high. It's all there is to it. So let's look at the amount of sell side pressure for REN, because I'm actually quite curious as to what it would tell us. So we start with daily active deposits, and you can already see sort of 3 prongs here coinciding with local tops. This is something that I expected to see. Active deposits are addresses that are used to deposit REN to exchanges, right? This is the only purpose that these addresses have. So the idea is the higher the active deposits go, the more there is sell side pressure for this coin in particular, right? So the more daily active deposits there are on a daily basis, the more addresses or entities are using REN to, or sort of moving their REN to exchanges, presumably to sell. So there's going to be more of a sell vol appearing for this coin. This is why we sometimes see spikes in daily deposits around local tops, sometimes all-time highs, but sometimes also just as the price sort of starts to appreciate, we see a lot of people taking advantage of that price action and applying negative price pressure, downward price pressure in the short term, right? So let's see if this is the same thing that we will see on the exchange inflow chart. To a point it is. So exchange inflow is a metric that tracks the total amount of REN that is being moved to known exchange wallets. Similarly, we have seen sort of some rather large spikes in REN's exchange inflow alongside several sort of local tops. Recently, though, it has sort of declined. So let's see the total supply of REN on exchanges. Is it moving up or depreciating? Okay, so this is pretty cool. So generally speaking, this type of a trend is something that I see relatively often. So we have seen a pretty big decline in the supply of REN on exchanges here, from basically 33% of its total supply on exchanges to just 28%. So a pretty sizable drop in just the availability of REN on a known exchange wallets, right? So it's not the first time that I'm seeing this sort of divergence between the availability of a coin on exchanges and its price action. Generally speaking, there seems to be sort of an idea here that as the supply of the coin sort of dries out on exchanges, assuming there's unchanged demand, it can sort of inflate the price action of that coin in the short term. And this seems to be at least what's coincided here. And then as the price of REN started to appreciate, we have seen a lot more REN being moved to exchanges. So you have seen this just recently in active deposits and exchange inflow, both of these metrics rising, suggesting that there's more and more REN being returned to exchanges, presumably to take advantage of this rally. I think especially as we were approaching the $1 mark, a lot of people seem to have been spooked a little bit as a sort of psychological milestone. So it's not at all surprising to see a whole lot of REN being moved back to exchanges. Recently, there's been once again a decline in the total supply of REN on exchanges. I think this is not necessarily bad, especially like what I would like to see to, I think I've hit my camera a little bit, sorry. What I would like to see alongside this reduction in supply and exchanges is I would like to see an increase in network-wide activity. So I would like to see an increase in transaction volumes, in circulation of REN, and in daily active addresses. If that sort of happens as the price declines and as the supply of REN on exchanges declines, that would be a pretty decent, like fundamentally at least speaking, it would be a pretty decent divergence, bullish divergence for REN. Currently, we're not seeing that. Like I showed a minute ago, active addresses are sort of just chilling. They're not really making any moves, staying in the same range for several weeks now. But this at least is a hopeful sign for REN holders, is the fact that there seems to be, the sell side pressure seems to be drying out a little bit, at least in the short term. All right, cool. Let's see where we are with MVRV. I wonder, I used to have REN's dark node wallet saved. I don't have it at hand. If somebody can link to it in chat, I can check out exactly how much REN is being held in that wallet. But it's a lot, and it just keeps increasing over time. So there definitely is like utility for REN outside of just interacting with it on a daily basis. So there are just people that have used that REN to put it into various staking mechanisms. So it's expected that the total activity of REN would like at least subside a little bit, but relatively you still want to see an uptick in address activity and network momentum overall, even with that rising amount of REN being staked. Okay, so MVRV, like we said a minute ago, it's a metric to capture the average profits or average losses of a group of holders. So 30-day MVRV, average profits or average losses of all addresses that have acquired REN in the previous 30 days. Currently, they're down 11.9% of their initial investment. This is on average. So on average, all REN holders or addresses that have acquired REN in the previous 30 days, they're down minus 12% relative to the last time that REN has moved on the blockchain. So they're underwater, and they're actually quite significantly underwater. If we can, okay, let's take like let's take last year and a half maybe. Yeah, I think this is fine. So let's see where we are right now. Okay, let me just first, oh, no. Let me delete these first, there we go. And let me see where we are. So this is where we are right now, at about minus 12%. So yeah, historically, there have been periods where we've dropped much lower than this. I think these are, generally speaking, massive outliers, like down to like 30 and 40%. Minus 40%, but it can obviously hit those levels. I think as we approach the minus 20% mark, I think historically speaking, this is it could be a potential accumulation zone for REN holders. Not necessarily, but like I said, the lower the MVRV ratio gets, according to some on-chain analysts, the more opportune time it can be to accumulate REN or a coin if you believe in its long-term fundamentals, right? So generally speaking, we're definitely not in, this was sort of a profit-taking period or profit-taking zone, probably anything above like 30%, as you can see. And then here is where we're much underwater. So the more underwater we get, the less incentive there's going to be to sell even. So generally speaking, I like this. Let's look at the long-term MVRV ratio. It's just about to hit break even, which is also decent. Let me look at this real quick. So this is where we are. This is as low as we got. Let me show you the full history of REN's long-term MVRV ratio to give you a better sense of how low we can go. So I generally like to exclude the first sort of 6 months of MVRV ratio, because just based on the way that the metric works, it's always going to be mega inflated values. So this is sort of historical lows, right? Down to like minus 50%. But that being said, I think anything sort of in the sort of minus 10 to minus 20% range is still pretty low. And if we see any signs of like general uptick in network activity, these levels, so you would expect it to go a little bit lower. And if it does, these levels could be an interesting time to think about, considering exposure in REN if you're so inclined. Let's look at social metrics for REN real quick. All right, let's take the daily interval, take the last maybe year and a half of data. Yeah, so, okay, we have seen a bit of an uptick in REN social mentions alongside the rally. Generally speaking, not a whole lot currently. Let's look at social dominance. Yeah, it's pretty low. So every now and again, there's a few sort of short-term spikes in people talking about REN. It seems like around here, yeah, and then here as well. But overall, it's actually quite low. So, I mean, I don't think that's bad at all. I would hope, or I would expect for rent to have a better chance to appreciate in value while the crowd is focused on other things, even if it's just shit coins. While people coins that are in projects that are trying to do something actually disruptive, like I think Ren is, are just working hard behind the curtains. So overall, yeah, decent. We can also check. Actually, we have a different chart that shows the amount of total Bitcoin locked in Ethereum. What's happening with Ren BTC? Let's see. Actually, I mean, the last time that I checked this chart, it actually didn't look that good for Ren BTC. It was kind of plateauing. But, at least in the last, okay, so let's say from July to here, October. Okay, so, early or sort of late July, 12,000 Ren BTC, 70,000. So this is 5,000 new BTC wrapped in the Ren protocol's bridge. I mean, through Ren protocol. It's not bad. Can we look at all time? Yeah, this is where it was very, very bullish for Ren. So all of a sudden, I remember us talking about Ren at this point in time, like amount of tokenized Bitcoin through Ren has just exploded in like 2 months' time. Since then, a lot of it has been reclaimed. But then recently, or sort of alongside this recent latest correction, it seems like more and more Ren BTC is being minted. I don't know what are the sort of, if there are any additional use cases for Ren BTC. I think you can put them in a few yield aggregator protocols. If there is anything else, let me know in chat. But yeah, from a sort of a protocol level metrics, this is one that you would also want to pay attention to. Like, Ren BTC is an important part of the Ren ecosystem, important product for Ren, although obviously not the only one. They also wrap a bunch of other coins, but BTC is the king. So if you want to, from a protocol level, examine how healthy Ren is looking, I think one of the metrics to help you understand that is how much Ren BTC is being minted. And so the answer is 5,000 in the last, 3 or 4 months. I mean, okay, let's look at wrapped Bitcoin just to give you some sense of perspective, because wrapped Bitcoin is still the king. So let's take the same period from July. This is late July, so I was looking at here. So this is 195,000 Bitcoin to, let's say here, 241. So this is 50,000. So it's 10x compared to Ren BTC, right? So Ren Bitcoin is still, the majority market share owner in terms of tokenized Bitcoin on Ethereum. So this is sort of the barometer that you want to compare other tokenized Bitcoins to. Is the rate of growth higher or lower than wrapped BTC? Currently, it seems like it's lower. So, all right. I think that's good enough for Ren. What do we got, Max? Any other coins?
Yes, I believe we are tied in first place between DYDX and XRP.
Oh, okay. DYDX and XRP. Interesting choices. I think let's look at XRP a little bit, and then we can, because we don't have exchange data for XRP anyway, so it might be a little bit faster. And then we can take a gander at DYDX. So this is something that we've talked about for both XRP and Litecoin. So I don't know, like we are supposed to talk with Crypto Eri. She's a pretty big XRP YouTuber. We were on her YouTube a few times talking about XRP from our own metrics, sort of talking about where we see the coin and the network's health going, like what are the trends. Generally speaking, I mean, this is great. I don't know if it's organic or not. So it's sort of ridiculous to see the amount of addresses interacting with XRP sort of do a 5x in a month and a half. Specifically, while its price action is kind of growing, but it's nothing crazy, right? So I think XRP is like one of the best performing coins in terms of network activity over the last month and a half. Litecoin has had a similar uptrend, although Litecoin has stopped in terms of its network growth recently. So yeah, Litecoin has had a very similar uptrend, sort of. So I'm not surprised to see it finally, recover in terms of its network action. Although currently it's, starting to see signs of weakness, show signs of weakness in terms of on-chain activity. But XRP, man, Anyone in chat that can, because I haven't like done a deep analysis into, okay, what are these addresses? What is the reason that all of a sudden we're seeing such a massive inflow of activity with the XRP token? But 120,000 addresses, that's massive. So that's currently, that's about 5 times less, 6 times less than Ethereum's. But on a good day, that's like 4 times less than Ethereum's, right? So when Ethereum is now like super high in terms of active addresses because of its price action, but generally Ethereum's daily active addresses are between like, I don't know, 450 and 550,000 on a relatively normal day. So I mean, XRP is picking up. Litecoin is also picking up. I don't know why. I don't know if there are like any specific reasons or any specific additional use cases that have all of a sudden been introduced to XRP that would warrant this amount of new activity. If there is, I would be interested to know. I mean, we'll have Crypto Area, like I said, I think next week on the call. So we'll talk about it with her. But generally speaking, I mean, it's difficult to argue that this, if it's legitimate and if it's an organic spike in network activity, it's difficult to argue that this is a bad sign. It just is, you know, all there is to say. Okay, let's look at a few additional. Okay, I'm already at a year. So let's see social volumes for XRP. Yeah, so I mean, generally speaking, several spikes in social volume alongside the rally or rallies and local tops. Currently, social dominance or sort of social volume slightly peaked here, but overall, I mean, nothing outside of the norm. Social dominance is also quite low. What about the sentiment towards XRP? Is it positive, negative, or ambivalent? So it was quite high here at the local top. And also quite high here. So this is, like I said, okay, so this is where we've talked about Bitcoin as well. High or elevated sentiment metrics suggest that a lot of people are very bullish about the coin. A lot of people are overly excited and exaggerating its potential, its price potential in the future. So generally speaking, high sentiment, while there's no silver bullet, high sentiment seems to be affecting the price of a coin more negatively than positively on average. So not surprised to see a big spike in social sentiment coinciding with the local top for XRP. Currently, it seems like it's once again dwindled down. This is where I would like XRP sentiment to be. Like, I know XRP army is quite active, and especially like when a coin starts pumping, they're very, very excited and very easily excitable. But for the longevity of its rally, I would like XRP holders to just kind of be miserable. Sorry if that sort of hurts anyone's feelings, but you know, the more skepticism there is about a coin, the more pain that its holders are feeling, especially if the fundamentals are strong, which for whatever reason, XRP's fundamentals seem relatively strong at the moment. I think it's a good sign. So yeah, sentiment was high. Social volume was also slightly higher here. Now it's normalized back. Let's see what the MVRV is looking like. What are the potential sell-off points for XRP? Okay, I'm just checking the questions. Says, how do these social mentions take into account the XRP bots? Great question. So we have a metric that tries to negate any sort of bot activity. So any account that spams messages or creates or posts more than a single message of that type, we exclude those mentions. That's a metric called unique social volume. So we do try to sort of filter out the noise as much as possible and try to avoid spammy content, because you're right. I mean, it's not just XRP bots. Like, people associate social, chatter with the XRP, or sort of fake social chatter with XRP, but it's also like Bitcoin as well, Ethereum, Chainlink. Like, there's a lot of bots just in, automated accounts just shilling random coins. I don't think XRP is an exception there. So, but yeah, we are trying to sort of clean that data as much as possible. So, all right, this is the 30-day MVRV ratio for XRP. So currently we're at about 1%. I mean, I think that's fine. Similar to Bitcoin and Ethereum, we're now at a sort of a break-even point for swing traders of XRP. So the lower this gets, the better. But at the moment, they're sort of in the neutral territory. I don't think there's going to be much of an incentive for people to sell XRP at these levels, like 1%. Just think for yourself. If you had XRP, and you bought it when it was 1.5% less than worth than it is now, would you sell? Right? This is the question that you need to pose when you're looking at this metric, and then just sort of amplify it to everybody that bought XRP in the past 30 days. And then let's look at the 365-day ratio. Yeah, it's currently at 41%. So this is much higher. Obviously, like the longer term holders are swimming in dough, plus 40% of their initial investment. But it's still sort of, relative to several sort of peaks here, it's still got room to grow. Generally speaking, this is the same for all large coins. So Bitcoin has a pretty high 365-day ratio. Ethereum has pretty high 365-day ratio. XRP has it. Litecoin has it. Like there were just a lot of outsized gains in the last year or so. So there's still a lot of long-term holders that are sitting on a bunch of profits. I don't think that they're currently sort of playing the market. Like if you look at the movement of dormant addresses, they're actually quite low still for a bunch of these coins. So I think the long-term holders are still kind of chilling on the sidelines. And for now, it might be, at least in my assumption is that it's mostly like swing traders and short-term spot trading that is driving the market. So even though this is quite high, it should be put in proper context. So yeah, okay, we're at about 10 minutes past the hour. I think we have to sort of start calling it quits, Brian. Anything that you want to add before we sort of add final notes to this?
No, I think we've hit a couple nice altcoins here with Ren and XRP. And if you do have other questions, guys, most of you know about our Discord, and we welcome any and all questions you may have. As a reminder to everyone, we do have a 35% off discount going on right now. So if you're not a Sandbase Pro member yet, now's a great time to jump and test the waters for 35% off by using code SANDGIVING21 at checkout. We are more than happy to help. If you have any difficulty applying that code, just feel free to email support@santiment.net, or even just drop us a DM on Twitter. We'll be happy to help and get you all sorted.
So pretty good opportunity to get into this this platform of ours. If you have had any sort of doubts or concerns, 35% off. Like you do get 2 weeks for free anyway, and then the first billing cycle, whether that's a monthly or your yearly cycle, is going to be 35% off, which I think is a no-brainer. So we will be back in a couple of days with another market overview. Like I said, we will also have Crypto Eddie at some point, hopefully soon, on the call to talk more about XRP. So everybody that's interested in Ripple in particular, stay tuned. And then, yeah, if you would like us to, talk about any specific coins outside of what we already talked about today, there's been a lot of stuff to talk about in terms of Bitcoin. So we didn't really touch upon much, just 2 other coins that we talked about today. Join our Discord. Link is in the description, and then you can just ping us especially in the Sandbase Pro channel or in the general channel. Just ping us with questions, and then we can sort of talk a little bit more about specific coins. For now, I think that's going to be it. So final thoughts as far as I'm concerned when it comes to Bitcoin. The metrics that I would keep an eye on in the next maybe like 5 or 6 or 7 days. So number 1, it's going to be daily active addresses. I used it as a thumbnail of this video. So this is how important I think it is right now. It's still in the sort of upward momentum. It still has upward momentum. So it just broke a 6-month high the other day. 1.19 million daily active addresses is a massive number. The question now is, can it maintain that level? So obviously, I think part of it is because Bitcoin has had this massive increase in price. So the question now is the network activity going to dump now that we've hit an all-time high, like we've seen back in May, or is it going to continue? Like we're still some ways away from historical or record highs in terms of network activity. So there is more room to the upside if the network is strong enough. So, the question is what happens there? And then the other question that might be interesting is what happens with whales. In particular, addresses holding between 100 and 1,000 and 10,000 BTC have been losing, like their combined holdings have been declining over the last 10 days. They've declined by about 60 to 70,000 Bitcoin. That's more than $4 billion. If this downtrend continues, it could be a sign that there is some lack of confidence by Bitcoin whales, and then you need to decide for yourself how confident you are, holding or entering into trades while this is happening. And then finally, keep an eye on social volume and funding rates. So I see a few people in chat think that low social dominance is quite concerning for Bitcoin. If you think that's the case, I would strongly suggest checking it on a daily basis in the next couple of days and maybe a week or so, because it is quite low right now. Sentiment is also quite low. It seems like nobody really cares or talks about Bitcoin at the moment. There's quite a lot happening on the crypto casino as usual. So whether that's reminiscent to you of 2017 vibes, if that's true, keep an eye on social metrics. So that's going to be it from us for this call, guys. Make sure to leave a comment, like, and subscribe to this video, because it helps a lot with the algorithm, and it helps us reach more users and more community so that we can all be smarter together. All right, we're going to be back in a couple of days. Thanks all for joining us, as always. And yeah, talk to you soon. Stay safe out there, all right? All right.
Thanks, Dino. Bye, guys.
See you guys.